Good evening, students. Welcome to the LVC CA Final Paper 3 Advanced Auditing Assurance and Professional Ethics. And we are studying our Section 1 Engagement and Quality Control Standards, right? And very important series, SA 700 series, it's going on, right? So, what is the auditor's role basically? If we think of it's reporting. So, of course, our session was started. Two sessions are already being conducted on recording, a reporting chapter, and it's our third session. And today I'm going to introduce you all with a new faculty for CA Final Paper 3, CA Venugopal Patangeji. है ना? And he will be taking you through this topic reporting, and he is having vast experience in assurance and advisory. He has done statutory internal audit of listed, unlisted, private and government companies. Of course, he has also designed SOPs and risk control metrics for multinational companies. So he is having very good experience, and I hope he will enrich your knowledge also with his practical experience so that you can feel that how we when we will become chartered accountant, how we will prepare, how we will draft the report, what are the factors we need to take care, and with the help of real audit report he will be making you understand. Feel free if you have any doubt and make it more interactive. And of course, every time I tell you, prepare your own notes, do writing practice so that in next session you are through with the topic which is being covered earlier, and in the next session you can ask your doubts, right? And practice with the help of more and more questions. And of course, I have requested the faculty to take to help you in drafting of the opinion paragraphs also. How you will be why questions are shown in the screen? Venugopal ji?
I came back to your
No,
screen,
you
ma'am.
need not to go to question. No, your screen is shared.
Oh,
So
no,
either you
I came.
share the specific file because your whole dashboard desktop
Oh,
is
sorry.
we
Yeah,
can
fine.
see, and your questions screen is visible over here.
Yeah. I was thinking your screen will be visible. Fine, ma'am. Yeah, please continue.
No,
Sorry.
no. Okay. So not taking much of the time, I think you just do one thing, Mr. Venugopal. You do one thing, you stop sharing the whole screen, rather you share the specific file.
Sure.
Right? That will
Yeah.
help you because your screen will not be visible. Whatever you want to share, na, that only file you should share.
Got
Right?
it. Yeah,
Yeah.
I did
So,
that.
dear students, not taking much of the time, but of course, your feedback is very important. And I'll seek your feedback, right? And you can call me on 0120 3045 925 and also reach to us through BOS mobile app. Ask your query feature also. So, not taking much of the time. Over to you, Venugopalji. Thank you.
Thank you for your introduction, ma'am. Good evening, students.
Good evening, sir. Good evening, ma'am. Welcome, sir.
Good evening,
Thank you,
Beta.
thank you. So, as ma'am was already mentioning that two classes, one is on 6th October and second is on 8th October. Chapter 7 is already been covered. Part of the chapter is already been covered. So part of the chapter will be covered by me. So we will look into what was covered and what was yet to be covered. Let us see that. So on 6th October, Harshad sir has covered introduction, what is all about reporting, how reporting is a final step. As you have already seen few chapters before this. So how audit procedures, how sampling, how materiality, how all other chapters has culminated into a report. Such introduction has been given, and a detailed discussion was happened on SA 700 basic elements. Starts with title, etc. All those things. So with respect to going concern, few more details which we can expect that I'll cover in the next class. And similarly, the other standards like 701, 705, 706 will also be covered. So thereafter, sir has taken care of 143.1, which is duty to inquiry, and 143.3 duty to report. All those points have also been covered. So on 8th October, sir has covered like what will be the scenario if standards on auditing along with international auditing standards on auditing along with international auditing standards, if they combined and do the audit, how the reporting can be done, what are the possible scenarios, that also has been covered. And he also took about explaining supplementary information. Thereafter, certain CARO clauses was also explained, right? So if you have any questions in this area, please let me know. Otherwise, we can discuss the what is left over in this chapter. We can discuss. So, any doubts in the last two sessions? Do you have any doubts?
I think they don't have any doubt, so we can continue.
We can continue. Yes. So, coming to the topics which we are going to cover. So we will continue coverage. So CARO faculty has covered 3, 1, 2, 3, 6. So we are going to cover 3, 7 to 321. So these are the topics which we are going to cover. And thereafter we will also take upon 143.12 and 145. Then audit versus certificate. What is the difference? Notes to accounts versus auditor's report or qualification we will be covering. If time permits, we will cover SA 700, SA 701, other standards of reporting we will be able to cover. So how are these related? How to remember this, or how we can able to compile everything? So I have prepared the aerial view. Before start of any chapter, we should have an understanding of what this chapter comprises of, how we can relate one topic to another topic. We can see that now. So reporting, we can think of reporting of corporate entities and non-corporate entities. Largely, this chapter and entire auditing covers about corporate entities. So in practice, once you come into practice, probably you will also end up doing non-corporate entities with the knowledge, with the experience which you have gained from learning of corporate entities, which is pretty much easier than corporate entities. So in corporate entities, we all know that Companies Act is applicable. So 143, section 143 gives powers as well as duties to auditors, and it talks about auditing standards. So there are multiple sections, subsections in 143. So this is all about reporting. So 143.9, which talks about compliance with auditing standard. 145 tells who can sign the audit report. 143.10 will tells how auditing, who can prescribe the auditing standards. Central government can notify the auditing standards, which is suggested by ICAI. So all those things are coming from these sections or these subsections. So all this, if you see all these subsections, these are the subsections forming part of this chapter. So we will learn 143.9, we will learn 143.10, we will learn 143.12, we'll learn 143.1 and 143.3. So this is how we can remember the entire chapter. So now coming to 143.10, which is the standards which are notified by central government, proposed by ICAI. So that we can see, like CARO, we have 21 clauses. So let us see. ICAI standards has two types. One is quality control standard, another is engagement standard. So this chapter exclusively does not talk about quality control standard, which will be covered in our first chapter of auditing. But in this chapter, we will be concentrating on engagement standards, and within engagement standards also, standards on auditing only will be covered. So again, on standards on auditing, which are all the topics will be covered? Only reporting standard, which is starts from SA 700 to SA 720. If we go into details, these are all the standards, SA 700 to 720. So if one has to remember entire chapter in one shot, so these are the few slides which you can take a screenshot, which you can view it once or twice, so that you can remember entire chapter in one go. So all these pieces has to get joined so that you can able to remember, you can able to recollect, and you can able to represent yourself in the exam hall. So what all this chapter is consists of. Hope it is clear and hope it is useful. If you have any doubts in last 2 slides, please let me know.
Clear, sir.
Hope it is clear, right? Yeah. So how far we able to connect all these chapters, all these sections, all these standards are all interrelated to corporate reporting and section 143. It revolves around 143, right? Even these auditing standards are also forming part of 143 itself. So let us go into details. So let us say, so what are the points we have discussed so far? So 143 3 we have discussed Caro up to 6 points, right? 1 to 6, 3 and 6, 3, 3 1 and 3 6. So now we will discuss from 1 second. So now you can see my screen PDF, our ICAI chapter, ICAI material, right? So what does clause 7 talks about? So the clause 7 talks about whether the company is regular in depositing undisputed statutory dues, including GST, PF, employee state insurance, all other acts, right? So what do we report here? So we need to check whether company is regular in paying statutory dues. So if there is a delay, so what we should report here? We should report arrears of outstanding statutory dues as on the last day of financial year concerned for a period of more than 6 months from the date they become payable. So when we should check this, we should check as on the last day of financial year. So not as on the date of signing. So when should we check? As on the last date of financial year is what we need to check. So this we need to emphasize. So when we should check on the last date of financial year, which is, let us say we are auditing for financial year 24-25. We need to check as on 31st March 25, not on the date of signing. So that is one part which we need to emphasize. And as on that date, if any statutory due is pending for more than 6 months, again we should emphasize on more than 6 months, right? So any statutory due is only statutory dues of goods and service tax, what all mentioned here we should check, or any other statutory dues. So we should give emphasis again on any other statutory dues. So there may be any other statutory due, like let us say wealth tax, which was previously prevailing, which was not paid by company, or there is any other tax which there is any other tax which was due but not paid. Let us say professional tax, which is very much prevalent, which companies, all the companies are paying, but it is not mentioned here. Still, we need to check that tax as well. Definitely yes. So what does this clause mentioning about? Whether any tax, any statutory dues which were pending for more than 6 months. So we should take the benchmark, or we should take the time period starts from the when we should check as on the last date of financial year concerned, not on the date of audit. So hope it is clear. Any doubts here up to here? So let us see how Reliance has reported this, how other companies reports this. We'll see from live financials. So you can see here. So in respect of statutory dues, undisputed statutory dues including goods and service tax, etc., have generally been regularly deposited by it with appropriate authority. So they are telling it, they are regularly depositing by it with appropriate authority, and there were no undisputed amounts payable from all the statutory for a period more than 6 months from the date they became payable. So let us take an example. Any statutory due, let us say GST, the due date has occurred and the company has not paid. And how many days it became overdue? Let us say 1 month. So should we report? Should we report that?
No,
No,
no need.
sir.
Yeah, correct. So if it is, I'll give you an example, and it is also mentioned in one of the case-based questions. Let us say ESI. So probably you may be knowing employee state insurance, right? So company, what they are doing, they are paying the money on ad hoc basis. They are depositing the money on ad hoc basis. And once they compute, they got to know at every month end, there is something excess or shortfall which they have paid. So which they are covering up in next month. So this practice they are following. So now you tell me whether we should report such cases.
No, sir, it's not recorded because it will not be ending more than 6 months.
True, got it. So let us say one more scenario we'll take. Company, it has become more than 6 months, okay, as on, if I consider March, but before signing date they have paid entire money, so there is nothing due. So should we report?
Yes, sir, because as on 31st March, it was due for more than 6 months.
So but you are telling to readers, how do you report it?
We may report that as on 31st March, it was due, but we may add another line to give a fair presentation that yes, the company has now deposited.
Good. So we should add additional line item to tell the readers that although there is statutory due which was pending for more than 6 months, as an mandate, we need to report it, but we also need to cover what was factual, so that these dues have been paid, so that we are also bringing that factual point in our report to make it more fair. Hope it is clear. This is with respect to clause 7A. Now we will discuss clause 7B.
I have a question on this ad hoc basis example you gave.
Yeah.
So
Okay. Yes,
if
sir.
there is a shortfall, why don't we report it for more than 6 months? Obviously, if it is for more than 6 months, shall we report it if there is a shortfall
Sure.
for 6 months?
Sir, I'll repeat the example what I have just given. So what I was telling, every monthly basis they are doing this practice. So let us talk about May month. May month they are paying on ad hoc basis. So if I compute accurately, I am getting, let us say, shortfall. I paid short. So that they are paying in June month. And June month, when I compute accurately, excess or short, I am adjusting in July month. So at max, they are going up to 1 month delay, not beyond 1 month delay, if you see this example. Hope it is clear.
Okay, right.
Yeah. So any other questions with regard to 7A, clause 7A? We'll move to clause 7B. So clause 7B, so these are the important points we should cover. Next, clause 7B. So let us say there are statutory dues which was mentioned in clause A have not been deposited on account of dispute. Sorry, have not been deposited. We should underline have not been deposited on account of any dispute. Then the amounts involved and the forum where dispute is involved shall be mentioned. So what they are telling, so let us say income tax has given a demand notice, GST has given a demand notice. So now to fight that case, or company can deposit money, but company decided that what they have done is correct, and now they went to appeal or they went to fight the case. So in that case, company may not deposit the money. Let us say there is a dispute and money is deposited. Should we report? So I'm repeating. Yeah. So
Yeah, repeat the question again, sir, please.
yes. So there is a dispute. But company has deposited the money before going for appeal. Company has deposited whatever the money which was told. Company has deposited and started appealing, going for appeal. So government got their money, but the case is running. So in this case, company, as they have deposited the money, in case of dispute, we no need to report. But whereas there is a dispute, however, company decided not to deposit the money, in such scenarios only we should report. So we should report what we should report. We should report the forum in which it is pending, okay, the amount, how much is involved, all those details they need to mention. So let us see how companies are reporting this. So this is how companies are reporting in clause 7b. The details of statutory dues referred to in subclause A above, which have not been deposited as on 31st March on account of any dispute, are given below. So central excise tax, central sales tax, customs tax, etc. What are the nature of dues? What is the amount involved? And for which period it is involved? At what forum? This is important. If a company gives half information or part of this information, let us say company is giving amount as well as the department name or the statute name, that is not good enough. So company has to mention the amount, company has to mention the act name, company has to mention the forum at which it is pending. So this is how the detailed disclosure has to be given as per clause 7b. So now let us look at another company, how it gives. And here you will get more details as well.
Sir, if there is no dispute, then whether we need to give the nil report?
Yes, we should tell that we should give every clause in caro. Every clause in caro, if it is positive, we will mention. If it is negative, we will mention. And if it is not applicable, we will mention. Right? You saw certain clauses in previous session as well. If it is not applicable, let us say revaluation, clause 1 if you take. So revaluation was not performed. We will mention that fact revaluation was not performed. If revaluation is done, we should mention the details. More than 10%, okay. If it is the net book value versus the revaluation value, if it is more than 10%, so we will report it. So although it is not applicable, still we will give it. Here also, if there are no disputes, company is running fine, okay. So there were no cases on company, there were no demands raised on company. So we will mention the fact that there were no disputes. So here you can see, hope you can see my screen. So here, Maruti Suzuki, okay. So they have given this disclosures. But in addition to this, they have also added one more disclosure. You can see it here. The following matters have been decided in favor of the company, but department has preferred appeals before higher authorities. So they are mentioning that although this have been won by company at certain level, but departments are going to next level appeals and fighting. So they are just giving one more disclosure that they are today or tomorrow they are going to win these cases. So this is additional disclosure given by another company. However, same thing, forum at which it is pending, which period these demands were raised, and what is the amount involved was also clearly mentioned. Same disclosure, but additional fact they are mentioning to improve the fairness. So any doubt with regard to clause 7b?
So this disclosure is not mandatory.
Not mandatory. No, this disclosure, one second. So
yeah,
let
right.
us
That Maruti Suzuki kind of disclosure.
see this table is mandatory, but this additional sentence which they have mentioned here is not mandatory. They can club this table in the above table itself. They could have clubbed it here.
All right, all right. So dispute means whether it is on the part of company or on the part of department.
Correct. From both point of view, yes. So moving to So clause 7, A and B, we hope it is fine. So now we'll move to clause 8. So clause 8, so let us see what is clause 8 talking about. So whether any transaction not recorded in the books of accounts have been surrendered or disclosed as income during the year in tax assessments under income tax. So anything which is surrendered or disclosed, previously it was undisclosed, now they have disclosing it as income in their tax assessments. If they disclose, what they should do, they should get into books of accounts, right? So whether that has been previously unrecorded income has been properly recorded in the books of accounts during the year. So two scenarios, again positive and negative. Let us say company does not have any undisclosed income, company has not surrendered anything. So in that case, that clause is not applicable, right? So taking the negative scenario, company gone for an assessment and the assessing officer found out something which was not disclosed previously, and now they are telling issued a demand notice. So you got to know that there is some undisclosed income in the books of accounts, so which you eventually recorded. Now in this case, you should also mention that what is the volume of amount, what is the amount which was undisclosed previously but recorded in this year, in which tax assessment. Tax assessment can be done for multiple years, so which tax assessment, all those details has to be given. So I can show you two reports, and these two reports will give you some fair idea. So what does this company report says? There were no transactions relating to previously unrecorded income that was surrendered or disclosed. So this is kind of, there is nothing which was undisclosed previously or which was found out, came out from income tax assessments. And similar reporting was done in other company as well. We can look at that as well. Same nomenclature, there were no transactions related. Okay. But we also need to cover, probably we may get a question saying that during income tax assessment, income tax officer, assessing officer has found out certain undisclosed income worth of 2 crores. So how do you report it? And company has done recording properly. Company has taken that and company entered in the books of accounts. Everything is fine. And company also paid tax on that income. And assessing officer is fine. So still should we report?
Yes, sir. We have to report that positively.
True. So even though you have paid tax on it, even though you have recorded it, but previously you have unrecorded, it came out recently and it is happening from income tax assessments, then we should report it without fail under clause 8. Okay.
And one more thing, sir, for all these Caro clauses, the materiality would be applicable. Like if the amount is, let's say, 10,000, 20,000, we can skip that for a company like Reliance.
We can, the reporting pattern may differ. You can see, I'll show you some, although we have not covered as
Like
you have
in the,
asked, I can just
like
show
in
you
the,
one thing.
sure.
I'll show you one example. Let us say clause 7A we will see. So why does company is telling, and other material statutory dues applicable to the company have been regularly deposited by it. So now
Got it, sir.
they are not telling other statutory dues. Are they telling other statutory dues? No. They are telling
No.
other material statutory dues, as you have rightly pointed out. So if I remove this material here, probably every penny has to be reported. So let us say there are some 100 rupees which are lying for more than 8 months. So cleverly, okay, auditor also will mention this point, material, as you rightly said. So something which is immaterial, you need to specify your wordings So wherever in the Caro, if you see the word material, I'll show you another clause here. You rightly said, we will also discuss in detail when we come to this clause, although so no material fraud. Okay. So let us say a big company, big multinational company may have frauds occurring of 50,000, 1 lakh here and there. So all the frauds has to be, it may be brought to the notice of auditor also. Should we report all the frauds? So petty frauds cannot be reported. So what auditor has to do is, he should change his wording to no material fraud. Instead of saying no fraud, hope it is clear for you. So you use the word no material fraud, right?
Yes, sir. Got it. Thank
So
you,
here
sir.
also we use the word no other material statutory dues, correct? So it is mandated for auditor to take care of every rupee, okay? But only by using this material word here and there, we can ignore immaterial items. And as you rightly said, immaterial items are also not helpful for stakeholders to take decision making, right?
Right.
So we can, for the sake of stakeholders, for the sake of fair reporting, for the sake of everyone, so we can ignore certain items, but we need to be very careful in drafting the report. Yeah, moving to next clause. So hope we are fine with clause 7 as well as clause 8. So any doubts till now?
Sir, in class 7, I have one query.
Please.
Sir, we discussed that no material. See, even the due is, even the single rupee is a due, right? As per the tax audit report, see, even the single rupee also we are liable to report it. See, in
Right.
the case of that class 7 also, any due, statutory due means it's a due. We have to report whether it is a material or immaterial. That is not a matter. That's what I feel.
Yeah. See, audit report is, you see, it's professional to professional, it varies. But if you see how far it is relevant to stakeholders, how far it is relevant to users of financial statements, you tell me how far it is relevant. So if I report, let us say 5,000 due which was not paid, so it will not change decision. Okay. So the materiality. So we need to again discuss about materiality. Okay. So you can again read materiality. You can again keep this doubt alive. Okay. You'll get the answer. Okay. Next. So let us see point number 9. Whether the company has defaulted in repayment of loans or borrowings or in the payment of interest thereon to any lender, if it's the period of amount of default to be reported as per the format below. So it is mentioning that whether company has defaulted in repayment of loans or borrowings or in the payment of interest, whether principal or interest, to any lender. To any lender. We should emphasize on point any lender. So should they restrict themselves to banks, financial institutions, or any company? No. Anyone. If you have taken loan from body corporate, if you have taken loan from banks, if you have taken loan from financial institutions, if you have taken loan from holding company, anyone, it has to be, if you have done any default, it has to be reported. So unlike clause 7, which gives you time till 6 months, here it doesn't say 6 months. So what does that mean? What does that mean?
Even there is a 1 month delay, we need to report.
Even it is 1 day delay. Even it is 1 day delay, we should report. Not even a month. So you can clearly see it here. Number of days delay or unpaid. So even a day, even 10 days, even 15 days, we should report, and we should also give classification. So which lender, what type of lender, we should group them and we should provide it here. So this is clause 9A. Okay. So 9 has 6 sub clauses from A to F. Let us go one by one. Whether the company is a declared willful defaulter by any bank or financial institution or other lender. Again, here also there is no restriction. If you did any willful default. If they have declared you as willful defaulter, then you should report it. Next.
Sir, how we have to check the willful defaulter?
Yeah. So how do we check that willful defaulter? So let us say you can also check while you are taking bank confirmations. While we are obtaining bank confirmations, our bank confirmation has to provide not only the balances which were lying with that bank, okay, it can be fixed deposits, it can be borrowings, it can be CC account. We should not only give what is there, we should ask them what are all the accounts opened in your bank, okay, and whether this company, whether you show it as a default declared willful defaulter, okay. So we can check all those things from our bank confirmation itself. We can write in the bank confirmation and we can take the balance confirmation from banks. That is one way of checking it. Second way of checking is through news what you got, okay. So generally if any company, okay, does any default, it will also get happened in the news. So you can also check about the company which you are doing audit in the news to check whether any any bank has, any financial institution has declared that company as willful defaulter. So with these two checks, you can check whether it is a willful defaulter or not. Moving to clause C, whether term loans were applied for the purpose for which the loans were obtained. So you have got term loans, you have got long-term loans which were utilized for short-term. Is it fine or should we report it? So it should be reported. If I take one more example, we'll take, if I take loan for purchasing machinery A, but I purchased machinery B, would this be reported?
No, sir, that's not, no need. It's related to machinery alone. It's a different
Correct.
machinery.
Correct. So the purpose is, although I have specified in the sanction letter or in the documents that I will purchase it for purchasing some machinery A, machinery make, I have mentioned it. Let us say I have purchased another machinery, but in spirit you have purchased another machinery but not the same make. Still you should not report because it is, the purpose is long term and the utilization is also for long term. But if the purpose is for long term and you have utilized for short term, we should definitely report here, okay. And similarly vice versa, whether funds raised on short term basis have been utilized for long term purposes. So you have raised money for working capital but you are using it for capital purpose, for purchasing some machinery. So there you should report along with the amount you should report. Clear? So we are fine with clause 9A to D, right? Next, whether the company has taken any funds from any entity or person on account of or meet the obligations of its subsidiaries, associates or joint ventures. Here, the money which was taken exclusively for the purpose of meeting obligations of subsidiaries, associates or joint ventures. So if you have obtained that, you should mention the nature of such transactions and amount in each case has to be reported. And let us say last point is company has raised loans during the year on the pledge of securities held in its subsidiaries, joint venture associates. If so, we should give the details of this thing. And also company, let us say if they have default such repayments also, we should make a note of it. Hope it is also clear. So let us see how it is reported, okay, in different companies. We'll see that. So clause 9A, it talks about company has not defaulted. So here we are telling company has not defaulted in repayment of loans. Can we see here material, the word material? The word material is
No.
not mentioned here. That means not even a single rupee, not even a single day. Not even a single rupee, not even a single day, there is a delay. Hope it is clear. Next. The
Yes.
company has not been declared as willful defaulter by any bank or financial institution or government authority. And similarly, based on the knowledge, belief, the term loans which were used, term loans which were obtained, which were applied by the company during the year for the purpose for which term loans were obtained. So it was being utilized, it has been availed for the purpose which it has been obtained. And similarly, short-term basis have not been used for long-term purposes. And last but one, on an overall examination of standalone financial statements, the company has not taken any funds to meet the obligation of subsidiary associates joint ventures, and company has not raised loans during the year on pledge of securities. So mostly this is plain cases where the clauses are not applicable. Clause E or clause F is not applicable, or there were no transactions as such. So let us see one different scenario where it becomes a little interesting. So clause 9A is pretty much same. Clause 9B is also pretty much same. Now clause 9C. Can you say what is the difference they have mentioned here when we compare to the previous report? Clause 9C, I'll read it out for you. The company has not taken any term loan during the year, and there are no unutilized term loans at the beginning of the year, and hence reporting under clause 9C of the order is not applicable. So what is the difference between what we have just read in previous report versus what we are reading now? Can anyone tell what is the difference?
Yes, here the clause is itself not applicable because there was no term loan. But in the previous recourse, there was a term loan, but it was not kind of
Misutilized.
misutilized. Right.
Not
Right.
misutilized. Good. So the rest of the clauses is again they have not raised any by way of pledge, and they have also not taken any funds. So any doubt in clause 9? We are fine with clause 9, right?
Yes, sir. I think in class 9, E and F will be applicable where there is a holding company and subsidiary pattern or joint venture associate is there.
Correct. So if the company does not have subsidiary, associate, or joint venture, so the clauses are itself is not applicable. So we should mention the fact that the company does not have subsidiary based on our verification. The company does not have subsidiaries, associates, or joint ventures. Hence, reporting under clause 9E and F are not applicable. That's how you should report it. Clear?
Okay, sir. Here that the quantitative is not there, but qualitative we need to mention.
Sure. Correct. Yeah. Then moving to clause 10A. So clause 10A, whether money is raised by way of IPO, which is initial public offer, or further public offer or follow-on public offer, including debt instruments. So a company can raise money by way of equity, by way of debentures, okay, by way of IPO, or by way of further public offer. Okay. So company is starting for the first time. They are going public for the first time. So we call it as IPO, initial public offer. If company is going already public, but they want more money, they want more equity, they'll again go for public offer. We call it as FPO, which is follow on public offer or further public offer. So that is further public offer. Let us say company does not want equity, they want debentures. They want money as debt, not as equity. So they will go for listed debentures also. So including debt instruments during the year were applied for the purposes for which those are raised. So you all know that this IPO, FPO, or debentures will go along with the prospectus. So in the prospectus, they'll mention why they want this money. They want to expand the business. They want to expand the market. They want to do R&D. So they'll mention all the purposes in the prospectus. So that will be the document. So in previous case, the purpose can be known from sanction letter. In this case, we will get to know from prospectus. Hope it is clear. And once we know the purpose, If it is not used, if it is not utilized for the purpose which it is raised, we should report it. The details together with delays or default and subsequent rectification, if any, may be applicable, be also reported. So let us say company has issued right issue. They've gone for right issue. So should we report it here? So it's not an IPO, it's not an FPO. The company has gone for rights issue. Should we report it?
They are not talking about right issue over here, sir.
So right issue is also kind of, so although they are not talking, so in spirit, it is also kind of IPO only. It is also kind of public offer, right? So it will cover under further public offer. So it is public offer for which we are taking money from public, and we should utilize that money for the purpose for which it is taken. So if it is applicable and utilized, we'll give positive assurance. If it is applicable and they have misutilized, we'll give negative assurance in this report. So let us see quickly how they are reporting. I will not take you to simple case. I'll take you to the interesting case which I have just explained. So the company has not raised money by way of initial public offer or further public offer, including debt instruments during the year. Hence, reporting is not applicable. This is straight case. So here you see yeah. So now here you see in our opinion, money received during the year towards unpaid calls relating to right issue of equity shares in an earlier year have been applied by the company for the purpose for which they were raised. So here you see, you read the paragraph once again. They were telling during the year. What they were telling during the year, right? But this company is reporting the right issue of equity shares in an earlier year. Why do you think so they are reporting here? Let me read it. In our opinion, money received during the year towards unpaid calls related to right issue of equity shares in an earlier year have been applied by the company for the purpose for which they were raised. Although they have received the money in earlier year, but the utilization happened in current year. Hence, reporting is done in current year. So last year, the utilization has not happened. Last year, they have only collected the money, but they have not utilized it. So which they have utilized in current year. So we should also mention that utilization happened in current year for the money which you have received in previous year. They have done it properly. That is the reason they are mentioning it, that it has been earlier year and they have applied for the purpose for which they were raised. And the company has not raised money by way of initial public offer or further public offer through debt instruments. So 9A is clear for everyone. Sorry, 10A is clear for everyone. So moving to 10B. So what is 10B? 10B, whether the company has made any preferential allotment or private placement of shares or convertible debentures. So what is preferential allotment or private placement? So I don't want to issue equity shares to public. I got some investor and I want to give shares only to him. So we call that as private placement. I'll issue equity shares, I'll issue debentures to very minimal parties. Let us say 2, 5, 10, up to 200 people. If I want to issue, so we call that as private placement. So here you are also taking money from them. So we need to check the requirements of section 42 and section 62 of Companies Act. What does this section tells? Do you have any idea of what does this section tells? What are the requirements under this section 42 and section 62? Any idea? So these sections, it talks about we need to find a registered valuer. So the shares has to be, the debentures has to be valued by a registered valuer, and all these documents has to be submitted to ROC. So these are the points which company has to comply with when they are doing private placement. The company may issue equity shares at a lesser value, and the general public may at loss, the lenders may at loss. So the shares has to be valued by registered valuer, and the document pass 4 has to be filed with ROC. All these documents has to be submitted with ROC, and the funds which were raised also has to be used for the purpose of which it has been raised. So if not, we need to provide the details in the amount involved and nature of non-compliance. So the clause 10 A and B is very much similar. So company is getting some funds by way of public or by way of private. So we should see whether that money which was received is utilized for that purpose or different purpose. If it is utilized for the purpose, we will give positive assurance. If it is misutilized, then we should give negative assurance, together with how much is default, how much is delay. All those details also has to be mentioned. So let us see how it has been reported. So the company has not made any preferential allotment, so hence it is not applicable. We'll take one more example. The company has made preferential allotment. So what we have just seen is negative assurance that it has not been, there is no preferential allotment. Here, the company has gone for preferential allotment for shares for consideration other than cash. So what we saw is fund based. If they have received funds, that funds have been utilized or not. Here they are telling other than cash during the year. So for such allotment of shares, the company has complied with the requirements of Section 42 and Section 62 of Companies Act. So they are giving, they are gone for preferential allotment, not for funds, but for other than cash. Does anyone can guess what is the purpose or what in return the company is getting by issuing preferential allotment of shares? Any guesses? So let us say company is acquiring another company, or company is purchasing certain assets, company is taking some intangible assets. So in such cases, company may issue equity shares, and they will get in return not the cash, but they will get in return some assets or some company or some business. So for that purpose, they have issued this preferential allotment, and Section 42 and Section 2 has been complied, and there were been not made any private placement or preferential allotment in case of fully or partly or optionally convertible debentures during the year. So equity they are differentiating with debentures. So clause 10B is also clear for everyone. So any doubt still here?
Yes, preferential allotment, does it mean preference shares?
No, preferential allotment does not mean preference shares. Preferential allotment means I'm issuing shares for private parties, not I'm going to public. I'm just making small announcement. I'm just giving, let us say, nowadays this startup is happening and my startup is doing fine. So I will go and do my presentation to venture capitalists, to high net worth individuals like Ambani or someone, or Mahindra for that matter. You also heard news from multiple cases where venture capitalists have involved, seed investors were involved. So these presentations, they also want some equity. Even Shark Tank, for example. So this Shark Tank, how do these people will invest in that company? So for them, they will do this preferential allotment of shares or private placement of shares. It does not mean preferential shares. Hope it is clear.
They're like institutional buyer.
Sorry?
They're like institutional buyers.
Institutional buyers. Yes, yes. So these are the clauses. Clause 10B. Next, we will see clause 11 A, B, and C. So this also have a relation with other section, which is 143 subsection 12. What does this clause says? What we should report? What an auditor has to report? Whether any fraud by the company or any fraud on the company has been noticed or reported during the year. So any fraud by the company or any fraud on the company, two ways. Company has done fraud, okay, or someone like employee or customer or supplier has done fraud against the company. If you have noticed, you should report this during or reported during the year. Then you should, the nature and the amount involved is to be indicated. So how this has been reported? Let us quickly see. So based on audit procedures performed for the purpose of reporting true and fair view of the standalone financial statements to the information and explanation given by the company, by the management, no fraud by the company or no material fraud on the company has been noticed or reported during the year. So we should again see no fraud by the company, no material fraud on the company. So there are certain frauds done by customer or employee or supplier against the company, but as an auditor, because you are doing verification, you are conducting verification on sample basis, you may not detect or you may not identify such frauds. Because of that reason, we are telling no material fraud of the company has been noticed or reported during the year. So let us say if you found out a fraud, so these frauds, should it be found out by auditor or should it be found out by management? Which one has to be reported?
Both, sir.
Both. Good. So let us say fraud has been identified during the year. They got to know this employee has done fraud. Let us say purchase manager, while procuring goods, or the supply chain manager, while interacting with transporter agreements, they made a fraud. These are the general frauds, or these are the high ticket frauds generally employee does. They identified the employee, they recovered the entire money. There is no loss to the company. Should we report it?
Yes, sir. We need to report and how it is solved.
So even the fraud has been identified and the money has been recovered, we should report all those frauds. Clear? Next, 11B talks about whether any report under subsection 2 of section 143 of the Companies Act has been filed by the auditors in form ADT4 as prescribed under Rule 13. Although we have not covered, it is part of this chapter to cover this. Does anyone has idea about what is section 143 subsection 12?
Sir, let's talk about fraud involving more than 1 crore. We need to report to the central government.
Good. So this we are again going to cover. Yes, absolutely right. So any fraud which is involving more than 1 crore, it has to be reported to central government through form ADT4. So if auditor got to know about any fraud which is more than 1 crore, that has to be reported to central government. So it has to be reported on the same day, or how it is reported? Any idea?
Yes, sir. First, we will go to the audit committee. We will inform them immediately after finding within 2 days.
Good.
We will ask the clarification from them. We will wait for 45 days.
Yes.
If there is no response, then within 15 days we will give that representation and what happens to the central government. If they also responded within that period, their representation along with our representation also, we will give to them to the central government.
Absolutely right. So we have in a way we have already covered section 143 and subsection 12. So if it is more than 1 crore, within 2 days, we should inform to those charged with governance. Those charged with governance can be audit committee or can be board of directors pertaining to applicability. Then we should give 45 days time to respond. So along with the reporting which we have done, the response which we have got, if we got it, we should combine it and we should report it to central government through ADT4 within 15 days from the 45th day. We should report it to central government. If they have not provided the response, we will directly report it to central government. From 46th day, we can report it. We no need to wait for 15 days. So that is all about 11B. What is 11C? 11C talks about whether auditor has considered whistleblower complaints, if any, received during the year by the company. So we no need to mention about all those complaints. We should consider all these whistleblower complaints. So what is whistleblower complaints? Does anyone has any idea?
Sir, by the company, they will fix some box will be there. They will put that anyone from the company, they will, if they feel that any fraud is happening, they will put over there. The management will take it and they will consider whether it is fraud or not. They will analyze it.
Yeah, any irregularity, not even physical, they also have certain emails, dedicated emails, wherein any employee can just write an email about anyone that these kind of irregularities are happening. So it will go to a dedicated team, and generally it will be a member of audit committee or chairman of audit committee. They will read all those emails and they will inquire, they will do investigation, and finally, if what they are telling is true, they will take necessary action. So such kind of emails, such kind of board meetings, audit committee meetings which were happening, can be, the minutes of those meetings can be taken by auditor, can be reviewed, and accordingly, if there are any irregularities, anything with regard to fraud, other matters also, whether auditor has considered or not, we need to report it. So again, whistleblower complaints applicable for few companies, may not be applicable for few companies. So generally, all these big companies, or all the companies for which audit committee is applicable, this is also applicable. So we should report that. We can see it. Let us see clause 11 A, B, and C.
Sir, whistle mechanism is as per LODR requirement SBI, the SEBI. Every
Yes.
listed company, it is a must, and the company which accepts the deposit from the public and company which has borrowed the money from the banking and financial institution exceeding 50 crores. That is it's mandatory.
Yeah, every listed company, it is mandatory, irrespective of the amounts, it is mandatory for every listed company. So let us see this. So 11, based on the audit purpose, we have seen this 11A. Let us discuss 11B. So to the best of our knowledge, no report under subsection 12 of section 143 of the Act has been filed by cost auditor or secretary auditor or us in form ADT4 as prescribed under Rule 13 of Companies Auditor and Auditor Rules. So this fraud criteria is not only applicable to statutory auditor, it is also applicable to cost auditor, it is also applicable to secretarial auditor while performing their audit. So what statutory auditor is reporting? Statutory auditor is telling there is no one, neither us nor cost auditor nor secretarial auditor has filed form ADT4 under section 143 subsection 12. That means there is no fraud occurred above 1 crore. And it was also mentioned we have taken into consideration the whistleblower complaints received by the company and provided to us during the year when performing our audit. So there were certain whistleblower complaints that has been taken, that has been reported. All those whistleblower complaints have been reviewed by auditor. So we are good till clause 11. Let us move to clause 12. So Nidhi company. Anyone has any idea about Nidhi company?
Yes, sir. In section 406, the company, the group of particular member will be formed. Minimum is member is 200 membership. That the paid up capital will be to
Yeah. It is like the company formed for the purpose of members. Okay. The money is also received from the members, and these like one for all and all for one. Okay. So that is the concept how Nidhi company works. So this clause is exclusively for the purpose of Nidhi company. Generally, you can see most of the companies, this clause is not applicable. But there are companies which are Nidhi companies for which this is applicable. In those cases, we should check the ratio of net own funds to deposits, whether it is 1:20 or not. And similarly, we also need to check the Nidhi company is maintaining 10% unencumbered term deposit as specified in Nidhi rules. So there should be some liquid cash available with the company. What is unencumbered term deposit? So you cannot have a locked or you cannot have a pledged deposit. So you should have a free deposits. You could able to demand deposits, we call. Whenever we want, we can able to take out that money. So that is the amount which we need to keep as unencumbered term deposit is 10%. Just for liquidity purpose, if there is any liability, we should able to pay. So this is the condition in Nidhi company, whether this they are meeting or not. If there is any default in case of payment of interest on deposits or repayment thereof, we should also report this. So if you look at this in case of big listed companies, they mention it as not applicable because they are not Nidhi companies. Okay. So quickly we'll move to next clause, which is transactions with related parties are in compliance with section 177 and 188 of Companies Act where applicable. So what does 177 and 188 of Companies Act says? What does it says?
Related party transactions.
So 188 is all about related party transaction. 177 is talk about oversight of audit committee. So these transactions will be reviewed by audit committee. Audit committee is kind of reviewing party. So they will check whether all the related party transactions are at arm's length or not, whether company is doing transaction with any company or any entity where director is interested, and those transactions are happening at arm's length or not. All those things will be verified. So as an auditor, we will also check those transactions. We will check how audit committee is overseeing it, how the related party transactions are happening. We also have a detailed disclosure of related parties in our financial statements, right? Do we
Yes,
have
sir.
it? So we can also refer that section of financial statements also in our report. So let us see how it has been reported.
In India is 24.
Yeah, India is 24. So let us see that.
We have SA 550 also.
Correct. So here you can see, in our opinion, the company is in compliance with section 177 and 188 of the Act, where applicable. For all transactions with related parties and details of related party transaction have been disclosed in the standalone financial statements as required by the applicable accounting standards. So they are mentioning that it is in compliance. It is in compliance means that they have taken adequate board resolutions, adequate special resolutions, and all those transactions have been done at arm's length. So that is how they have mentioning it as a positive assurance. Next, interesting clause 14. So ICAI also may question, sometimes they may also question or they may also test your memory power, right? So we should also try to remember these clauses. Okay. So I will take you to case-based questions in some time. Okay, where we can have a discussion on what we have just discussed. So they're also testing which clause. Okay, so we may able to at least remember the clauses. Okay, so 14A, it talks about whether the company has an internal audit system commensurate with the size of nature of business. So first question is, does the company has internal audit system? Second question is whether such reports have been considered by the statutory auditor. So you tell me, whether all companies for which CARO is applicable, internal audit is applicable? Vice versa, whether all companies for which internal audit is applicable, CARO is applicable?
No, sir. It's not like that.
So, which section of Companies Act talks about internal audit?
Section 138.
Good, good. So now, if it is so, how do we report this?
For listed company, it is a mandatory, sir.
Yeah.
And in case of other company, we will see the turnover is greater than 200 crores.
Yeah,
If
I'm talking about specifically, I'm talking about very specific question. Let us talk about all permutation combinations. So you take an example of listed company. Listed company, CARO is applicable, very much applicable, as well as internal audit is also applicable. So now, how do we report? We will report whether the company has an internal audit system commensurate with the size and nature of the business. So you will see who is the internal auditor, what is he doing, what is the scope of internal audit. Let us say company has 10 branches. Company has appointed internal auditor for one branch. Do you think the internal audit system is commensurate with the size and nature of business? The answer is no, right? So if a company has 10 branches, if company has 40 branches and internal audit was restricted to 2 branches, then we need to report the company has an internal audit system, but not commensurate with the size and nature of business. So companies, CARO is applicable, internal audit is applicable, but internal audit is not effective. Let us say company has 40 branches and internal audit was conducted for all 40 branches. Now we will report internal audit system is there and the internal audit is commensurate with the size and nature of business. That is how we will report it. Hope it is clear. Now talking about, let us take the internal auditor will issue reports. That reports has to be considered by statutory auditor. So one more question. Let us say if internal audit is taking care of sales, internal audit is taking care of purchases, internal audit is taking care of borrowings. He is doing every borrowing, every detail he is checking. Like a concurrent auditor. The internal auditor is working like a concurrent auditor. He is checking every borrowing, every interest payment he is checking. Should statutory auditor be relying on that internal audit? And should that responsibility of statutory auditor will get reduced?
no, sir. It is not true.
Yeah. So coming back to our scenarios, there is a company, example, for which internal audit is applicable. Let us say banking company. Banking company internal audit is applicable, but CARO is not applicable. So we are happy because CARO is not applicable, no need to report. You got it?
Yes, sir. Your question is clear. Since the CARO is not okay, continue,
Yes.
sir.
Now coming to third scenario. First scenario is applicable. Second scenario is CARO is not applicable, but internal audit is applicable. Third scenario where CARO is applicable, but internal audit is not applicable. Example, a company, private company, whose turnover is 100 crores. They don't have borrowing. They should not have deposits. So their borrowings is 0. Their turnover is 100 crores. So a private limited company whose turnover is more than 200 crores, internal audit is applicable as per section 138. So now a private limited company where CARO is applicable, but internal audit is not applicable. How do we report? We will give a negative assurance saying that the company does not have internal audit system. In 14A, we will mention the company does not have internal audit system. Now, how do I get that negative assurance to be turned into positive assurance? The section 138 mandates company to have internal audit, but section 138 restricts you to have internal audit? No. A company, private company whose turnover is 100 crores can voluntarily have internal audit.
Yes, sir. Voluntary they can have the internal audit.
They can have the internal audit, and they can give they can give that supporting to statutory audit. See, we have appointed internal audit. Now you consider these reports, and now you update this clause as the company has proper internal audit system with the size and nature of the business, and we have also considered the internal audit reports. So all scenarios are being covered. The fourth scenario is very negligible scenario where CARO is also not applicable, internal audit is also not applicable. So no need to discuss also. Clear? So this is clause number 14. So we will move to clause number 15. You want to see how companies are reporting? We'll quickly go through that. See, very simple, very positive assurance. In our opinion, the company has adequate internal audit system commensurate with the size and nature of the business. So it has adequate internal audit system. And we have considered audit reports issued during the year. Very simple. Okay. So you can also see this issued during the year until the date of audit report, covering the period up to 31st March 2025. So which audit report, till the date of audit report means which audit report he is referring to? He is referring to the statutory audit report. Let us assume internal audit also performing internal audit for Q4, January to March. He may not issue the report in March. He may issue the report in April or May. So that report was also considered by statutory auditors. That is what they meant. It is clear?
Yes, sir.
Yeah. Next, we'll move to clause 15. The company has entered into any non-cash transactions with directors or persons connected with him. If so, whether the provisions of section 192 of the Companies Act have been complied with. So what are they telling? They are telling any non-cash transaction with directors. So if a director has some property, has some machinery, has some asset, you are exchanging that asset with company's asset. Can we say barter system? So we are giving one asset, in exchange we are getting another asset, not cash. Not cash. Then it is a non-cash transactions with directors. So can anyone relate this? Is it a related party transaction? Yes, it is. It is a related party transaction. So now one transaction can be reported in two clauses. Clause 15 is also covered and clause 13 is also covered. So if a company has non-cash transactions with directors, so we should report twice. We should report in 15 as well as we should report in 13, because any transaction with directors is called as related party transaction. So ICAI may ask questions in combining two different clauses in the same CARO. They can ask one direct question from one clause. They can also ask multiple clauses. So how do we report this transaction in two different clauses? So let us see how this transaction has been reported. So clause 15 talks about, in our opinion, during the company has not entered any non-cash transaction with the directors or person connected with the directors. Any company where director is interested, such transactions were also not happened. Hence, 192 is not applicable. So here it is not applicable. Okay. So if it is applicable, we need to check section 192 compliance, and we need to mention that the company is complied with section 192. So in our opinion, during the year, all the transactions that company has entered, which are non-cash transactions, are in compliance with section 192 of the Act. That's how you will report it under clause 15.
So who is this persons connected with directors?
The persons connected with directors can be direct relatives or entities where directors are interested.
Okay, right.
Yeah. So clause 15, we are good till here. So should we take few questions?
Yes, sir.
Yeah. Before taking few questions, I want to show you something. So are you able to see my presentation? Yes?
No, that question is there, sir.
Just
Okay.
a second, just a second. Yeah. Now it is, right?
Yes, sir. It is a carve-out discussion.
Yes. Just a second. So now, before going to solve the questions, we will understand the approach to solve the questions. So how the approach, how the student should think if there is a question from Karo. May it be clause 1, may it be clause 21, how is should be your approach. So what you should think first? Can anyone tell me what you should think first? If it is a Karo question, what
Whether
should come
Karo
to
is
you?
applicable, whether Karo is
Perfect.
applicable.
Perfect. Yeah. So whether Karo is applicable or not applicable. So first you should check the name of the company. What is the business it is doing? Whether it is banking business, whether it is Section 8 company, whether it is a small company, whether any details with regard to paid up capital, turnover, details have been given. So if such details are given, first you should identify. You should not run through, let us say some fraud was given. Let us say case-based scenario, they give a lengthy question. So you may not forget, you cannot jump into some question. Let us say this is fraud involved here. So I will not jump into that paragraph. Be patient, let the question be complete. It may be 2 pages, it may be 3 pages, you should read it. And first check you should do is applicability. This is very important. Let us say you verified it is not applicable. Then you see where it is, where the option is given as not applicable. You select that choice in MCQ question. If it is a theory based question, you can start by saying applicability, mention the applicability. Provision you can write. Then you can write in the given case, so and so company falls under this category, and you can give conclusion. So all the theory based questions you will report as, first you will report what is the provision, and second you will report in the given case what has happened, facts of the case. Third you will report conclusion, your conclusion by applying these facts in the provision. So the applicability. What about next? Next we will see. Next, this is formed based on the multiple questions. Various questions I have seen and have formed this approach. So a question can become individual clause. They can ask individual clause wise questions. This is one set of questions. So this is once it is applicable. Now I am talking about individual clause. A question can come from multiple clauses. Question can come from multiple clauses, linking multiple clauses. Like I just told you, non-cash transaction with director has to be reported in 2 clauses. So how do you report in that clause? How do you report in this clause? You should also give an answer both the clauses. We just saw that a case can be come from multiple clauses. Next, even more complex. Caro clause with other sections or Caro clause with opinion paragraph. Can anyone recollect what we have just discussed? Any case we have discussed with respect to third scenario? A scenario we have seen all the way through. B scenario we have just saw. Anyone recollect any case where C is applicable? Caro clause to other sections or Caro clauses to opinion paragraph?
Section 143(12).
Good. So 143(12) is different section, and as well as Caro clause is a different thing. So they are interlinked. They can interlink and they say, now how do you solve this question? Okay. And sometimes we will also have Caro clause with opinion paragraph. So anyone able to recollect? Anyone able to guess what it could be? We have not covered it. We have not covered it. Any chances? You just put some pressure on your brain. Think about how can be Caro clause can be linked to opinion paragraph. Just for an, we will eventually cover that once we come to clause number 19. Okay.
Is
So
it
clause
about consolidated financial statements?
No. So clause number 19 talks about ratios, right? Going concern, right? Anyone has any idea? Clause number 19?
Yes,
Clause
sir.
number
It's
19? Yeah.
570 going concern.
570, yes, it is standards on auditing. I am talking
Yes.
about Caro here. So Caro clause 19 is also talks about going concern. We will eventually see, once we are done with this, we will eventually see that, or if you want, if you are very much interested, we'll go to that clause right now, but just hold for a moment. So here, clause 19, which talks about auditor has to analyze ratio analysis, auditor has to analyze future cash flows, auditor has to analyze various things, and he should give assurance that company is going concern. So that has to be reported in clause 19. Let us say SA 570, you got some material uncertainty, so you will report it as material uncertainty relating to going concern. Before emphasis of matter paragraph, you report it.
Yes, sir. That is a one paragraph is called material uncertainty relating to going concern.
True, you will report it as per, okay, SA 570, you report it. Now, in a way, it is forming part of below your opinion. Now, same thing you should also mention in clause number 19. You should also mention in clause number 19. How? We will see that. So we need to link the SA 570 with one paragraph which we report below opinion with what we are reporting in Caro. Example, going concern, company has not mentioned the facts of their going concern in their report. Just a minute. Am I audible?
Yes, sir. Very much.
Yeah. Yes. So now let us say if you have already gone through going concern, if management mention all the facts in their notes to accounts, then we will show it as material uncertainty. If management does not mention the facts about their material uncertainty, we should give it as a qualified opinion. So now we should relate with qualified opinion with Caro clause. So such complex questions can also be asked. So this is third level of complexity. So what can be further? Can there be any further? Yes, there is. So which is Caro clauses with another chapter, which also we will see in 45 IA, which is RBI. We have a clause and we have something like Nidhi company. We have something like non-banking financial institution where Caro is applicable and 45 IA registration is also mandatory. Such cases were also covered in case-based scenarios. So any doubt in this, we will eventually cover. So you can see it here. These cases have the scenario-based question 13 and scenario-based question 15. We will cover that. And for this Caro class to another chapter, we will cover in page 303 and page 674 of case-based questions issued by ICAI. That also will cover. We have examples which we will cover. So any doubts till here? Before going to before going to take up the questions, you should also know the approach towards reading the question, approach towards understanding the question, approach towards answering the question. Hope it is clear.
Yes, clear.
Yeah. So probably we may not be able to cover all the case-based questions in the today's class. We will try to cover as many as possible. But what I wanted you to do as homework, so you can take a screenshot of this. So this is out of 35 case-based questions which ICAI has issued. Okay, there were these many questions which are related to Caro. So I have covered the case scenario number. I have covered page reference in the document. I have covered which Caro clause they are talking about. And I have also covered which MCQ. There are 5 MCQs in every case-based question. But not all MCQs are relating to Caro. There may be one MCQ relating to SA 720. There may be one MCQ related to SA 706, 705. Okay. So that we will cover in later session. But in this session, as we are covering Caro, this table represents questions from case-based questions and MCQs relating to Caro only.
So thank you so much, sir, for preparation of this particular slide, which
Yeah.
talk about particularly the Caro. I think you have put a lot of effort, like for student. Thank you so much, sir.
Yeah. Thank you. So next, again is this. You also, so we have done color coding here, right? There is orange, there is light green to dark green, right? And I gave some coding A, B, C, D. So I've also coded, okay, this orange, it talks about applicability and not applicability. Okay. This light green represents questions which are dedicated to one clause of Caro. And there are questions which are D. D means you know that questions which are highly complex, where is kind of question coming from Caro relating to they are mixing up with other chapter question. See the weightage, if you see the weightage from chapter 1 to chapter 11, they have combinedly given the weightage, right? So the question may come from within the chapter, the question may come from one chapter to other chapter also. So that also has been covered. So this color coding will also be useful. So if you have already taken the screenshot, please do take another screenshot because you will understand the questions. So now you tell me which clause you feel difficult. Okay, we will take up the question, or you want to take it in sequence, we'll take it up. So can we skip applicability clauses, which you can do it as homework?
Okay, sir.
See, applicability clauses we'll skip because you can do it as homework. And clauses which was covered by previous faculty is also, I will skip. You can do it as homework. In the next session, you can come up with doubts. If you have any doubts, you can come up with doubts because it can be, you can see it is 173 page document, but I made it very precise for you. You can just go to that MCQ, okay? And probably you need little bit, you need to study the case also to answer that question. If you are very straightforward, you will get to know that, okay? So let us see first case, we'll understand more detail. So it talks about 1 to 6, first case only. So are you able to see my PDF? No? Yes?
No, sir. On the case-based question summary.
One second. So we have fifth MCQ dedicated for Caro. Now you can see, right?
Yes.
So if someone doesn't know the document name, so this is the document issued by ICAI, booklet on case scenarios. Okay. So please do download it and practice it. Okay. Whenever one chapter is completed, you should read these cases. So the first case scenario 1. So I am not reading the entire case. You should read it. Okay. We will see how we can answer it. Okay. So let us say now, fifth point, the company availed some amount of loan for new plant and machinery during the year under audit. Out of the total loan sanctioned, an amount of 25 lakhs was earmarked for the purchase of machinery oil extractor. But the company has acquired an improved model of machinery, namely oil extractor with dryer instead. State which of the reporting option would be correct. Question is clear?
No, sir, it is not visible.
1 second. Now is it visible? Geeta,
Yes,
is it visible?
Yes, sir. Yes, sir.
Yeah. So what does the question says? We have not read the case. We have not read the case, which we should have done it, but because of time, I have just gone into the question directly to MCQ. The company had availed some amount of loan. We will get 80% of the idea by reading this. The company had availed some amount of loan for new plant and machinery during the year under audit. Out of the total loan sanction, 25 lakh was earmarked for the purchase of machinery oil extractor, but the company has acquired an improved model of machinery, namely oil extractor with dryer instead. State which of the reporting option would be correct. Understood the question?
Yes, sir.
Yeah. Now, is it, can they purchase or they should not purchase?
Yes, sir. They can purchase, sir. This is a machinery. It's an improved model. They can purchase it.
So can I say the purpose for which money is received is for the purpose which it is utilized? Can we say that?
Yes, sir.
Okay.
Sir.
So now, which option is correct? You tell me. You read the options.
C, sir.
Anyone else? Anyone has different answer?
Yes, C is the answer.
So C is the answer, right? So what does it says? It says answer is C. You got it? So did we read the entire case?
I think it's not required, sir.
Correct. Okay. Next question. Case number 2, applicability. Case number 9, applicability. Okay. I'm going to case number 11. You want to see case number 2? Applicability, we'll see 1, which is first question. So I'm directly going to, yeah. So here you read this. Was the decision of XY and associates not to report the issues of ABC Enterprises in Caro justified? If so, under what reason? So here you may not be able to answer this unless you read the question.
Yes, sir. We can. What was the case? So we are not sure.
Yes. So here the reading of case is must. Okay. So if you are lucky enough, you get the questions which we have just discussed. Because instead of reading case, the MCQ question itself is sufficient to answer the attempt the question, right?
Yes, sir. It's better always to go through the question and see
No,
whether
definitely, without fail. Just I'm telling you, if you are lucky enough, you will get such questions. Here,
Yes, sir.
here you don't know, okay, what is ABC Enterprises? Okay, we'll see what is ABC Enterprises.
ABC Enterprises, a company that obtained a license from central government to promote cricket in rural areas of India. So what does it means?
The Section 8 company?
Yes, it means Section 8 company. Now you go and answer. So now you go and answer. So read the options and tell me which option is correct. So for Section 8 company, Caro is applicable?
It's not applicable, sir.
It is not applicable. Hence, Caro is not applicable. So which option you will choose?
A?
Yes, sir.
See, we just discussed Section 8 company. The Caro is not applicable. Right? So if it is not applicable, we should choose B. Caro 2020 is not applicable to ABC Enterprises.
Yes, it would be B. Caro not applicable.
Is it clear?
Yes.
So
Sir,
the answer is 1B. The reason is the Caro specifically exempt a company licensed to operate under Section 8 of Companies Act. So they want to promote cricket in rural regions, okay, which is not a business, okay, and they also got the license. So here we should give emphasis to the word license. So the case does not mention about Section 8. So we should carefully read the words. They got the license to operate for cricket in rural areas. Okay. Moving to next question. So case 11, question number 1. Or we'll go to 43. So this is next question. So ninth question, question number 5. Yeah, this question is already covered by previous faculty on applicability of, you understand the difference between small company and private company, right?
Yes, sir. The small
So-
company that might have capital 4 crore and turnover is 40.
Correct. So this question is based on that. Okay. So we'll skip this. Anyways, you already got the screenshot, so you do homework. We will see 54. Eleven one. Yeah, case number 11. First case. So kindly guide Mr. Rajan regarding areas where he may need to report the absence of internal audit function in the company in internal audit report. So where should he report? What is the question? Where he should report about internal audit function? Where he should report?
Sir, the class 14.
Clause 13 or clause 14? Clause 13 or clause 14? We have two options. So that's what I told you. You should memorize the clause numbers also. As you rightly said, the answer is right. It is clause 14 only. Okay. Clause 14. Clear? Next, we'll see case number 17. Case number 17, question number 3. We have not covered this clause, but you can try this. state the amount required to be reported by the auditor of BNN Limited under clause 17 of para 3 of CARO 2020 on account of losses during the year under construction. Okay. So you remember cash losses? In CARO, we should report cash losses. Do you
Yes, sir.
remember?
Yes, sir. Is there any cash loss reported in the previous year?
Yes. So which is the right amount? Which is the right answer? So
I
we'll
don't
check.
know. We need to see the guess.
Yes. So here the table given in the question. What does the table says?
Deficit balance P&L account 11.47 lakhs. Cash
So
loss is 2.95.
it clearly says cash loss is 2.95, right?
Yes.
So what
Yes,
would be
sir.
the right answer? What would be the right answer?
2.95, sir.
C.
Yes.
Sir, here we have to be very careful on this. The profit and loss account, it say the negative, but we should not consider that. Only the cash
Yes,
loss.
yes, yes.
As per the Ind AS,
See,
Ind AS 7.
yes. So cash loss is different. Your P&L loss is different. So that we need to be very careful of. But here it's straightforward question. Okay, you got the answer. Then we have 18, case number 18, question number 1. Yeah, this you can do it as homework. This is third clause. Okay, case number 20. So case number 20, question number, yeah. Case number 20 is fully dedicated to CARO. All 5 questions are CARO. So, yes. So what is this table? Have you seen this table? Do you remember something?
Yeah, undisputed dues.
We just discussed, right? Clause 7b. So what is this table gives? This table is giving what is a statute, what is the nature of dues, at which forum it is pending, what is the amount in what? Sorry, this is which year? It was mistake. The amount which was paid, unpaid, any other comments. Okay. So that is the table, right? So can we think this is very much similar to our clause B table?
Yes, sir. Class 7B.
Yes, clause 7b. Yeah, sorry, clause 7b. So here, first question. I'll go to that question where it is there. Yes. So second question, we'll go to first question little late. Select the correct state into reporting statutory dues which have not been deposited on account of disputes under clause 37B of CARO 2020. So these are the 4 options. You select, you pick one. So whether we should report all 4 matters or whether we should report just income tax before CIT and PF, which are pending only at Honorable High Court, or we should report income tax matter which is pending at ITAT, or we should report income tax matter pending before CIT, PF contribution and property tax matter on Honorable High Court. But matter pending with ITAT does not require reporting. Which is correct?
Sir, we have to report all the cases, sir. If it is not deposited.
Correct. So we should report all cases, all 4 cases. The answer is A. Okay. So next you see this clause. Should the fraud described in the case be reported by the auditor under clause 3(9)(a) Sorry, 11A. Sorry, 11A. So read the options. Let us not read the question. Let us read the answers. So if fraud is not fraud is not discovered by the auditor, fraud should not be reported. Number one, there is no duty to report since the amount involved is less than 1 crore. It is fraud on the company, and the auditor should report nature of the fraud and amount involved. The duty to report fraud under this clause is irrespective of the amount involved. Apply in the current situation since the amount has been fully recovered during the year from the employees who committed the fraud. Which is the right answer?
C would be the answer, right answer. C.
I feel C is the right
answer
answer,
is
sir. C.
yes. So yeah, C is the right answer. Okay. So next, we have also seen clause 3.6. Clause 3.6, which is regard to cost accounts. You can take it as homework. Okay. And clause 2A, this is also has been covered. So you can take it as homework. So let us look at the answer. What is the answer for second MCQ? It is all the 4 matters has to be reported. What is the answer for third? Option C, because it is fraud on the company and the auditor should report the nature of the fraud and amount involved. The duty to report the fraud under this clause is irrespective of the amount involved and irrespective of whether the money is collected by the employee or not. Is it clear?
Clear.
Hope it is clear, right?
Yes.
Yes, sir.
Yeah. So can we move to next question? Case study 23. Third MCQ. So Rave Motors paid their arrears of undisputed statutory dues just a day before the date of audit report. After this, now the auditor believes that only disputed deeds need to be reported under CARO, as the undisputed are paid before the date of audit report. Which of the following is most appropriate course of action for the auditor in this situation? Read the answer, read the options. You understood the question?
Okay, sir. Understood the question. From when it is the due is there, sir? In
That is
the case,
missing. That is missing. Okay. You assume something here. Okay. But read the options.
next here I think is that I can read the option, but however, in this case scenario, is there anything given is relating to whether the loan is given on so and so date?
Good. You are thinking that way. Good. Because you should see the 6 months condition is fulfilled or not fulfilled. That is good. Okay.
Yes, sir.
But
Yes, sir.
as we are quickly running through the questions, okay, because we have so much to cover, you just read assume, let us say 6 months is fulfilled. It is more than 6 months.
Yes, sir. Answer A is correct, sir. See, for you, if there is an undisputed due more than 6 months only, we will report. Otherwise, we will not report it. For the disputed statutory due, we have to report it.
Yes, yes. So it says answer is A only. Paragraph 3 of CARO requires reporting of both disputed and undisputed statutory dues. So which is option A.
So answer would be B.
It's a see. Sorry. You are telling report both, right?
I'm saying we need to report both.
Yeah. Option B is the right answer, right?
Yes, sir.
Yeah. I was also telling option B, report both disputed and undisputed statutory dues. So B is the right answer. So what we just discussed, we should not consider if it is paid also. Even though if it is paid before signing of audit report, we should consider that dues and we should report it. But for transparency, we can mention the fact that it is also been paid. Although it is due for more than 6 months, it has been paid before audit report, date of audit report.
Sir, we can insert the remark column in that we can mention it.
Yes. So next question is with regard to, so we will discuss clause scenario 28. Yeah, 28, 3 and 5. So let us read 5 first. So here we should have the knowledge of both CARO as well as audit of NBFCs. We should have knowledge of current chapter, which is chapter 7, and we should also have knowledge of audit of NBFCs, audit of banks. So then only we can able to answer this question, but we can have a try. Regarding instances of cash embezzlement, which is fraud, identified by the company during the year, which of the following statements best fits into the reporting requirements of an auditor? Such instances are required to be reported under CARO as well as in auditor's additional report to board of directors of company. Such instances are required to be reported under CARO under relevant clause. Cash embezzlement amount is less than 1 crore. No reporting under CARO is required of such instances. Such instances are to be specifically reported in auditor's report under section 143 of the Companies Act. So if we have just covered this chapter, we would have taken option B. But once we cover that chapter, the answer should go to option A, because in that chapter we will discuss auditor will issue additional report to board of directors. So this kind of frauds has to be reported under CARO, also as reported to board of directors. So that is option A.
So actually, what is the case, sir, in this case?
Embezzlement, cash embezzlement. It's an NBFC. It's an NBFC. It's a fraud happened. Okay, identified by the company. Best fits. Okay. So which instance has been that right instance? Okay. So here we need to have knowledge of both this CARO as well as this chapter and previous the other chapter, which is audit of NBFCs. Okay. So we'll quickly move on to another question. Scenario 29. Sorry, scenario 33. Fourth question. Yeah. So now you see this. Out of the following, which view of Messrs. Deva and Co is the correct one for complying with the reporting requirement under CARO as regard lump sum deposit of estimated ESI collections and its adjustment against next month's deposit, leaving the insignificant difference of ESI amount. So the first case which I have explained you, that they are doing lump sum deposit of estimated ESI collections.
Ad hoc basis.
Sorry?
Ad hoc basis. On
ad hoc basis,
you
correct.
said,
Ad hoc basis. Lump sum ad hoc basis against next month's deposit, leaving the insignificant difference of ESI amount. So monthly they are doing this practice.
Then there is no need for report it on this.
No, there were, no need in the sense there are no
Undisputed.
undisputed dues which are more than 6
6 months.
months. So that is the
I,
answer.
I mean the dispute will be there for only 1 month. If it is more than 6 months, that case only we will mention it.
True.
Otherwise, we will say there nothing. But in this answer would be there is no undisputed.
It's not undisputed here. Yeah, it's whether the statutory due is delayed for more than 6 months or not. Okay. So disputed is your 7B. Clause 7B talks about disputed. Clause 7A talks about undisputed only. Okay.
Yes, sir.
So
Yes, sir.
clause 7A, it deals with only delay. Okay. The delay of statutory dues. Okay. So these are the cases. There were 2-3 cases which I have skipped. You can do it as homework. I'll share the slide. So we will see few more questions. So shall we take 5 minutes break? Then we will take few more questions. Okay.
Okay, sir. Generally, we will faculty will give the 10 minutes break.
Okay. You want 10 minutes break? Okay.
No, no, no problem. It's
Take 10 minutes. Yeah. Fine. Fine. Yeah. Break will start.
Yes, sir.
Yeah, thank you. So we have seen clause number 7 to clause number 14 of Caro, right? So we will continue with clause number 15 and let us complete till clause number 21. Okay. So clause number 15, what does it says? It says the company has entered into any non-cash transactions with directors. Okay, we have seen this as well. So we'll go to clause number 16. Whether the company is required to be registered under section 45 IVA of the Reserve Bank of India. So anyone know about the conditions? First, my screen is visible.
Yes, sir. No, 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 sir.
One sec, sorry. So 16A, okay, 16A talks about whether the company is required to be registered under section 45 IA of the Reserve Bank of India. For whom this section is applicable, okay, or what are the conditions mentioned from like 45 IA registration is mandated for which companies? Any idea?
Banking companies,
Banking
NBFC.
companies.
NBFC.
NBFC.
Yeah. So banking companies, Caro is not applicable, so we may not discuss. So for NBFCs, right? NBFCs, there is no exemption from Caro or any other company. For suppose there is a company whose financial assets is more than 50% of total assets, whose income is more than 50% of the total income coming from financial assets, then such companies are mandated to get registration under section 45 IA. So there are NBFCs which already obtained the registration, or there are companies which are acting like NBFC but not registered. So statutory auditors have been given the duty to verify whether a company is falling under that condition, falling under that net of 50-50. We call it as 50-50. What is 50-50? Out of total assets, let us say I have 10 crores of total assets. What is my financial assets? My investments, my cash, trade receivables, all these are my financial assets. PP is a non-financial asset. Inventory is non-financial asset. Loans and advances given is a financial asset. So all these financial assets, if I total it up and if I compare with my total assets, if it is more than 50%, then the first condition is satisfied. And if income from these financial assets, example, I made investment in some equity, I got dividend. I made investment in fixed deposit, I got interest income. Then I gave loans and advances on which I am earning interest, that interest income. All this interest income is more than 50% of my total income. Then these two conditions have been satisfied. This is and condition. Once a company satisfies these two conditions, it has to get registered under 45 IA. The reason being, it is acting like NBFC. It had started acting like NBFC. So the responsibility was given to statutory auditors that if you come across any company which falls under this criteria, please report in Caro. So now we should report here. So there may be companies which are already registered. There may be companies which are doing the business, in substance doing NBFC business, but not registered. So auditor has to report it here. Hope it is clear. So we should write, if it is registered, fine. The registration has already been obtained. If it has not obtained and falling under the net, we should mention that company performing or carrying out businesses, okay, of NBFCs, but they have not obtained the registration under section 45 IA. So this is the first clause. Second clause, whether the company is conducting any non-banking financial or housing financing activities without a valid certificate of registration from the Reserve Bank of India as per Reserve Bank of India Act 1934. So pretty much second clause B is also talking about the same thing. Clause 1 and clause 2. Okay. So next is clause C. What does clause C says? Whether the company is a core investment company as defined in regulations made by RBI. So we understood for whom 45 IA is applicable. Now let us understand what is core investment company. A company wherein 90% of its assets is into investments. So that company is not doing any major business. The company's entire money, entire assets is 90%. 90% or more in investments only. So such companies, we call it as core investment company. So whether the company which auditor is auditing is a core invest company, yes or no? Number D, whether group has more than one CIC as a part of the group. If yes, indicate the number of CICs which are part of the group. Let us say the company which we are auditing is not a CIC. So we will give C, clause C will mention that the company is not a CIC, hence this clause is not applicable. But coming to D, what we will mention? We'll mention, let us say the company which we are auditing, holding company may be CIC. Its holding companies, okay, the ultimate holding company may be CIC. So we need to check whether our company is a individual company where individuals are shareholders, or whether our company has shareholders which are companies. So we should go to that link. We should go to holding company. We should check ultimate holding company. We should check entire group. Let us say my ultimate holding company has 3 more subsidiaries where one of the subsidiaries is CIC. So we should check the entire group structure and we should identify such CICs and report it here. So let us look into how reporting goes so that we'll understand. So clause 16A, it talks about the company is not required to be registered under section 45A because it is not falling under the category. Hence, it is directly telling 16A, B and C of the order is not applicable. So it is not carrying out NBFC operations. It is not required to be get registered and it is not a CIC. So all 3 clauses at one go, they are reporting as not applicable because it is not carrying out NBFC activities. Now, what is B? The group does not have any CIC as part of the group and accordingly reporting under clause 16D of the order is also not applicable. So as a group, okay, this company has a group of companies. So all those group of companies also there is no CIC. So let us see one more company. So the provisions of section 45 of the Reserve Bank of India are not applicable to the company. Accordingly, the requirement of the order is not applicable. Very much the same. The company has not conducted any NBFC activities or housing finance activities and it is not required to obtain certificate of registration for such activities. So this is also negative. The company is not a CIC. That is also not applicable. But here, so one company is combining all 3 and mentioning at one level. Another company is giving details for every clause. Not applicable, not applicable, not applicable. You can also jointly say like we have seen. So clause D, what is this representing? As represented by management. The group has more than one core investment company as part of the group. As per the definition of group contained in the core investment companies, Reserve Bank of India Directions 2016, there are 3 CICs forming part of the group. So what clause D requires? Clause D requires if you are not CIC, does your group have any CICs? If yes, tell the number of CICs. So they are mentioning 3, the number as 3. Okay, 3 CICs forming part of the group. Hope it is clear. Do you have any doubt in this clause? 16th clause.
Sir, as the company has mentioned it as represented by the management, so will it do any good mentioning it in the report? Because either way, the auditor has to somewhere check.
Yes, yes. See, we are ultimately it is auditor's responsibility to verify. Okay, so they are mentioning it as represented. Probably, yes, it gives a different viewpoint for the reader that auditor has not performed his duties. That may be a possible uh, interpretation we can make. But mentioning that, not mentioning that, does not absolve from tomorrow if something goes wrong, auditor is liable for what he has reported. Clear?
Okay, sir. Yes, sir. Got it.
Yeah.
Thank you, sir.
Yeah. Next, clause 17, it talks about whether company has incurred cash loss in the financial year and in the immediately preceding financial year. If so, state the amount of cash losses. So we have seen the case-based scenario where we need to disclose the cash losses. So these many companies does not have cash losses. They are doing good. There are companies which are not performing well, or initially startups which have cash losses. Okay, there are multiple multinational companies also having cash losses. Okay, so they treat that as an investment, but as an auditor, our duty is whether company is incurring cash losses in financial year, current financial year, also in immediate financial year. So we need to check current as well as previous. And if it is so, we will report that amounts. So how do we get this cash losses amount? Let us say I have given you balance sheet, P&L and cash flow. So can you able to compute cash losses? So does the cash flow gives cash losses?
Yes, from cash flow we can
Cash
identify.
flow statement will give the cash loss exactly, sir.
From
Yeah.
cash flow,
NDA
yes.
7.
So it may not give cash losses directly, but with the help of cash flow, you can compute cash losses. Okay. Because the cash loss, which was cash profit or cash loss, which was happening from operating activities, cannot be considered as cash losses. So you need to do some plus and minus. You need to apply. Okay. Then only, so there is detailed guidance note given on Caro. Okay. So wherein the computation is we can able to do. But as far as I have seen all the questions, and for you as a student, they may not be able to give entire cash flow and tell you to compute. So they will give you the amount like what we have seen. So you should able to identify that and report it as Caro point. Okay. Next clause is with regard to talking about resignation of statutory auditors during the year. If so, whether the auditor has taken into consideration the issues, objections, or concerns raised by outgoing auditors. So resignation of statutory auditors is a serious concern. Okay. So does the statutory auditor has resigned? Why so? What are the reasons? What are the issues happened with him? All the objections can be taken. Okay. All those have been considered by the current statutory auditor or not. You need to comment. Let us say the same statutory auditor is continuing. You will give that there are no resignation of statutory auditor. So we can see one clause, one report we can see. So quickly, the company has not incurred any cash losses during the financial year covered by our audit and immediately preceding financial year. And similarly, there has been no resignation of the statutory auditors of the company during the year. If there is so, we should write there has been resignation of statutory auditors of the company during the year, and the issues, objections which were raised by statutory auditor for their resignation was considered for the purpose of audit. We should report such terminology in our Caro. Next, this is the important section which also has a linkage to SA 570, which I was talking, clause number 19, on the basis of financial ratios, aging, and expected dates of realization of financial assets and payment of financial liabilities, other information accompanying the financial statements, the auditor's knowledge of board of directors and management plans. So he is talking about various things. He is talking about ratios, which is past information. He is talking about future information, which is aging and expected dates of realization. Aging is again a past data. Let us talk about debtors aging, inventory aging, trade payable aging. Okay, all those agings. So debtors aging will it gives you some information about going concern?
Yes, sir. If the debtor aging is cumulative, it's increasing, which means the fund is not realized.
Good. Creditors aging, does it give some information?
Yes, sir. If the creditor is not paid on time, which means the outstanding is the more, then which means we are not paying it on time.
So does that mean company does not have adequate funds? So by checking aging reports, can we analyze going concern?
Yes, sir.
Yes, sir. We
Yes.
can analyze.
So all these things, not only one, I am talking about all the items. You take one financial ratios. Can financial ratios able to tell some story about going concern?
Yes, a negative cash ratio, that cash liquid ratio.
Liquidity ratios, good. Liquidity ratios, current ratios, okay. Few ratios will give you some understanding. Asset turnover ratio will give you some understanding, okay. So as an auditor, we need to perform analytical review procedures, right? So analytical review procedures will form part of risk assessment procedures as well as substantive procedures. So we need to perform all these ratio analysis to assess not only the risky items, but also going concern. Aging, expected date of realization of financial assets, payment of financial liabilities, other accompanying financial statements, other information accompanying financial statements, okay. The auditor's knowledge of the board of directors, how board of directors are, what are their management plans, what are the future plans, do they have 5-year plan, do they have 2-year plan, do they have 1-year plan, do they have market expansion plan, okay. How would we know their future plans?
Board
Minutes
meeting
of
minutes.
Based on the cash projection.
Good. So we can ask for projections, we can ask for minutes of meeting, okay. Whether the auditor is of the opinion that no material uncertainty exists as on the date of audit report, that company is capable of meeting its liability existing on the date of balance sheet as and when they fall due within a period of 1 year from the balance sheet date. So now this has very much linkage with 570. So whenever you report something in material uncertainty, it is your responsibility to either refer or mention here in clause 19 also. Will you agree?
Yes, sir.
You
Yes, sir.
understood? So if there is any material uncertainty, can you able to tell that here the company is able to meet liabilities existing at the balance sheet date? No, you cannot say that. Can you able to tell when they fall due within a period of 1 year from the balance sheet date? You cannot tell. Okay. So all these things are relating to SA 570 reporting. Okay. So SA 570 we will report as material uncertainty. If company is not mentioning in their notes, we will take it up to qualification. Okay. So when we are covering SA 570, okay, we will also discuss about this clause again. So this is very important clause. Okay. So let us see how companies are reporting it. See how carefully it is drafted. On the basis of financial ratios disclosed in note number 39 to the standard financial statements, aging, expected dates of realization, everything which was you have discussed, management plans, etc. What we have just discussed. Nothing has come to our attention that causes to believe that any material uncertainty exists on the date of audit report. Nothing has means there is no material uncertainty. Company is doing fine. Company has going concern. Okay. And we further state our reporting is based on the facts up to the date of audit report. Something may turn up tomorrow. Some company may launch, some competitor may come up. So we further state that our reporting is based on facts up to the date of audit report. And we neither give any guarantee nor any assurance that all liabilities falling due within a period of 1 year from the balance sheet date will get discharged by the company as and when they fall due. So based on the facts, I am telling you they are able to pay. But something may come up tomorrow. Something may come up tomorrow, which is not known to us, not known to company also, and which may cause company not to pay their liabilities. So giving a positive assurance that there is no material uncertainty, but again telling that this positive assurance was given on the basis of facts received till date. If tomorrow something comes up and the company may not be able to pay, you cannot make auditor liable. Okay, that risk we call it as business risks. Hope it is clear. So such an important clause. Tomorrow, some creditor may come up and say, see, you told that all the liabilities as and when fall due, company will pay. But company is not paying the money. So they will also put a case on auditor. So how would auditor can be not liable? Because you should mention this paragraph, okay, to tell that there are certain things happened after I gave a report, which made that the liability which company need to pay, they have not paid. So any doubt in this clause? Very important clause.
Yes, sir. One thing that this clause limits the material uncertainty till the 1 year from the balance sheet date. But the going concern clause in the audit report, it can be, let's say, let's take one example that company is acquiring another company. After 3 years, the contract
Okay.
states that company has to pay this amount after 3 years or 4 years, let's say. So
Okay.
we don't know after acquisition if the company may run or not. So we may mention it in the going concern clause that there exists a material uncertainty that after acquisition the company may or may not be future. Let's say one thing that we have mentioned it in the going concern clause. But for the clause 19 of Caro, we have our visibility till 1 year only. So we don't need to mention it here. I'm just trying to differentiate between the going
No,
concern clause in
I
general and
understood.
this
I
clause.
understood. See, Ayush, the point here is your question is little hypothetical. Okay. Why I'm telling, if company is not in a position to pay, okay, in the next 1 year, okay, so how can you say that 3 years down the line the company may not pay? So you should, even in going concern, you will say that company is doing fine. You understood? See, you are telling me a hypothetical scenario. You are giving me a hypothetical scenario, but even I am challenging that hypothetical scenario. You are telling, standing today, after 3 years, you are telling company cannot pay. So what made you to believe that company cannot pay after 3 years? That company can able to pay their liabilities in next 1 year. You hope it is clear. So the question itself is hypothetical. At the same time, it is impossible. Is it clear?
All right, sir. Got it, sir. So we have to just think about if standing today, there is visibility of 1 year as well as 3 year and next time
Yes,
also.
yes. So what
Okay,
made you
sir.
believe that you are telling that third year it will not pay? Third year, though, you will, the company may flourish. Okay. The company, so you are telling me next 1 year they are good to pay. If they are next 1 year they are good to pay, that means company can grow further and they can able to pay third year liability also, long-term contract also they'll able to pay.
Right, sir. Right.
Okay.
Got it.
So you are convinced.
Yes, sir.
Yeah. So that is 19. Okay. Next 20. 20 is about CSR, corporate social responsibility. So section 135 talks about you need to give 2% of your net profit. There is a computation involved. So let us say profitable company. If it is loss-making company, obviously there is no liability against section 135. If it is profit-making company, you need to contribute 2% of your net profits. So that profits, whether they have spent it, whether they have not spent it. If they have spent it and the project is ongoing, okay, and that is fine, okay. If they have not spent it, they need to, okay, within period of 6 months of expiry of the financial year in compliance with second proviso, okay, they should deposit that. They should transfer it to specific funds specified in Schedule 7. So like PM funds, okay, there are some government funds you need to transfer. They will take care of that spending. In a way, you have computed, you have taken out that money. Now you should spend, you have not spent, okay. Now government will take the responsibility of spending it to public. Okay. So the first point is in respect of other than ongoing projects. So if it is an ongoing project, obviously, see, let us say there is a big company, the CSR coming around 100 crores or 50 crores or 10 crores. So you started building something. Day one, you will not spend 10 crores. Okay. You will spend 10 lakhs, 50 lakhs, 1 crore. And as and when the project's completed, you will give more money. They will do more work. You cannot just spend 10 crores in as it is. Okay. So you need some time. It may go up to 4 months. It may go up to 6 months. It may go up to 8 months. Okay. You are distributing stationery to all government schools. Okay. So that is, you need to identify schools. You need to recruit team. Okay. You need to identify who are needy and you need to identify how many people. You need to buy stationery. Example. I am giving an example. So it is time consuming. Let us say the project is ongoing. It may take 7 years. It may take 7 months, or it may take 1 year. It may take 2 years. Act is fine. Okay. But if it is not taking much time, there is no ongoing project, then the period is given is 6 months. If you don't spend, transfer it to specific fund mentioned in Schedule 6. If it is ongoing project, if money is going on, then no need to transfer to the fund, because you need to mention what are the projects going on, what is the amount of money you have spent, what is the money is budgeted to spend in future. That money you can mention. Okay. What is second clause? Second clause is
Sir, sorry, on the top way, sorry, even if it is an ongoing project, if it is not spent within the year, that case also the unspent money needs to be transferred to the special account within 30 days from the end of the financial year.
So that's not the case. See, if it is an ongoing project, see, it's not about just on paper you are telling ongoing project. You need to show it is ongoing project, right? So there are companies, or it is allowed to transfer 1 year fund which was not utilized to next year. Okay. Cumulatively you can do it if there is ongoing project. So no need to transfer.
Sir, actually, sir, in guidance note, it is very clearly given that I have studied sometime before. The thing is that whenever there is ongoing project, even though ongoing project means if the project identified and its working is going on, in that case, you will not transfer any money to within 6 months. Which means 6 months means if it is not project is not identified, in that case we need to transfer to there. as per the Schedule 7. But for an ongoing project as well, the 1 year is over, end of the financial year, within 30 days, we need to transfer to the special account. Unspent amount of the ongoing project.
I
Yes, sir.
differ.
I
Okay.
guess as far as I can see, it is covered in the clause B. It is if the fund has been transferred in the special account in compliance of
Yes.
subsection 6 of 135.
Yes. Correct. So if it is rightly pointed out, okay, whether any amount remaining unspent under subsection 5 for an ongoing project, that will be covered in clause B. Okay. Hope it is clear. So let us see how companies are reporting. So what they are telling, the company has fully spent the required amount towards corporate social responsibility, and there are no unspent CSR amounts for the year requiring a transfer to a fund specified in Schedule 7 of the Act or special account in compliance with provision subsection 6 of Section 135 Act. Accordingly, reporting under clause 320, subclause 20, okay, of the order is not applicable for the year. So they are telling whatever is coming around, it has been properly spent. So next clause is with regard to 21. So why clause 21 was not reported? Clause 21 is applicable to standalone or is it applicable to consolidated?
It's applicable to CFS, sir.
It is applicable to consolidated financial statements. Okay. Whether there have been any qualifications or adverse remarks by the respective auditors in the CARO reports of companies included in the consolidated financial statements. If yes, indicate the details of companies and paragraph numbers of CARO report containing the qualifications or adverse remarks. So should we report all the items or should we report only qualifications or adverse remarks?
Only qualification and adverse remark.
So if it is a standalone company, if it is a standalone report, if it is a standalone report, this clause is no need to report in their standalone audit report, whereas in consolidated audit report, they will report it. Okay. Let us say if company is individual company, they doesn't have subsidiaries, then also this clause is not applicable. Okay. So we should mention, what do we mention? We should mention details of the companies. Let us say a company has 4 subsidiaries and 2 of their subsidiaries has qualifications in their CARO. Okay. 1 to 2 qualifications they have. So you need to mention the name of the company. Okay. Relationship with that company, subsidiary or associate, and the qualification what they have given, the clause number and the qualification given has to be highlighted, has to be reported in 21. So this is with regard to 21 clauses. Okay. So we have seen this. So any doubt still here? So we will also, one second, we will, if there are no doubts, we will move to presentation.
You can ask MCQs also.
Sure, ma'am. Sure, ma'am. Yeah. We will cover 2 more questions. Okay.
Your screen is okay.
Yeah. So let us read this question. So discuss the reporting responsibilities of statutory auditor in the following situations for 23-24 under CARO. So in the financial year, Candy Limited decided to upgrade its register office located at prime spot in Bangalore. As part of this upgrade, the company sought to acquire an adjacent plot of land owned by Mr. Siddhant, who is also a director of Candy. So what does this says? Candy Limited and Mr. Siddhant. How are they related? Mr. Siddhant is director of Candy Limited. So related party, right? So it decided to upgrade its register office at prime spot in Bangalore. As part of this upgrade, the company sought an acquire an adjacent plot of land owned by Mr. Siddhant. Initially, Siddhant hesitant to sell, but Siddhant was persuaded to transfer his property to the company in exchange for a larger plot owned by Candy Limited. So now company owns some larger land. Siddhant own a land which is adjacent to company. So this plot located on a nearby street is double the size of Mr. Siddhant's land. Satisfied with the exchange, Mr. Siddhant agreed to transfer the property and the exchange was formalized in a deed executed by company's authorized representatives and Mr. Siddhant. The registration of the properties was completed by December 31st, 2023. So what is this transaction? This transaction is between company and director. So is it what kind of transaction is this?
It is a barter.
And what reporting we should do? Under one clause or under multiple clauses?
There were two clauses.
Two clauses,
Okay. What are those clauses?
13 and 15.
Yeah. So what does this clauses tells?
Related party transaction should be reported.
Okay. What is another standard? Another clause.
Non-cash transaction with
Non-cash.
directors.
Correct. Good. So there are two clauses. Okay. So which is here you can see the auditor is required to report the transaction as per clause 15 of paragraph 3 of CARO, which states that whether company has entered into non-cash transactions. Okay. And 192 compliance is there. Further, clause 13 of the paragraph 3 of CARO states that related party transactions are in compliance with section 177 and 188. So the auditor has to require to report same as per two clauses of paragraph 3 of CARO. So this is what I was mentioning about having a question which talks about two clauses. So any transaction with related party, you have already 13, clause 13 is already applicable. Let us talk about any other clause, okay, where you have to report. So you need to report in two clauses. So there can be straight question for one clause. There can be question involving multiple clauses. So let us discuss this. Discuss the reporting responsibilities of statutory auditor in the following situations under 23-24 under CARO. On 15th May 2023, a TDS survey was carried out in premises of SSO Industries Limited in accordance with the provisions of Income Tax Act. The survey team pointed out certain lapses regarding non-deduction of tax at source, and subsequently Deputy Commissioner of Income Tax raised a demand of 25 lakhs on the company, treating it as assessee in default. The company has not deposited demand raised and filed appeal against impungent order on 1st March 2024 under e-appeal scheme with JCIT appeals. Where should we report? Which clause?
Statutory dues under 7.
Yes. 7A or 7B?
B.
7B, correct. Okay. So we should report under 7B. Okay. They have reported and demand was raised to deposit the money, but they have not deposited the money. So can you also think about any other clause which can be, if you slightly change the question, if I incorporate that this demand which was raised for the purpose of undisclosed income.
Yes, sir.
I
Then that
repeat,
undisclosed
undisclosed
income,
income. Now,
yeah,
should we report in
was
one clause or multiple clauses?
multiple. There was another clause
There
where
was
the
another clause also attached to this question that becomes from single clause reporting to multi-clause reporting. Okay. So you should, while reading Caro, you should think about, okay, multi-clause. So once you understand the concept, the next level is application, right? So you should apply and you should think, can there be multi-clause question? Can there be a question where Caro also as well as section also represent? Can there be a question where Caro and opinion can represent? Can there be a question where Caro and other chapter question can be represent? Because case-based questions will be formed considering multi-clause, multi-chapter questions. Okay. So while you are reading, your thought process should be in a way that you should, because practical scenarios does not go standalone basis. Practical scenarios always goes, okay, you should multiple sections, multiple clauses, okay, multi chapters may be involved in practical scenarios. Is that clear? Next, we'll see one more question. So you are a statutory auditor. 1 second, sorry. So you are appointed as statutory auditor of SDA Limited for the year 23-24 in the place of CAT during the CAT. Okay. During the audit, you found an order dated 1st May 2023 under Section 148 of the Income Tax Act, wherein tax of 50 lakhs were demanded owing to undisclosed cash sales of 150 lakhs for the financial year 2021, which was accepted by the company and the applicable tax was paid by the company during the year 23-24. The company has not recorded such undisclosed income in their books of accounts during the year. On further inquiry, the matter with CAT, you came to know that CAT resigned due to non-recording of such transactions by the company. Is there any reporting responsibility cast on you regarding the above matters under Caro? So is it single clause or multi-clause?
Multi-clause.
Multi-clause. Which are the clauses?
Clause
Class 8,
8
8
and 8 and 18.
Yeah. So you see here, one clause is with regard to clause 8, another clause is with regard to clause 18. So there is undisclosed transactions where you need to report, and there are also resignation of auditor which you need to report. So question may come as multi-clause also that we need to be aware of. Clear? So quickly we can take few MCQs, 4, 5, simple, okay. Easy, okay. This is, so which of the following must be reported under clause 7A? Fast, rapid fire.
Undisputed statutory dues outstanding for more than 6 months. B.
B, sir.
Clause 7A only. Yeah, B. Correct answer. Everyone agrees? Next, clause 7B of Caro relates to
Disputed statute dues.
Yeah, right. You should be fast. Okay. The company has unpaid GST of 2 lakhs for 4 months and 1 lakh for 8 months, which is reportable under Caro.
1 lakh.
Correct. If statutory dues were pending as on 31st March but paid before audit report date, auditor should
Still report.
still report with note that paid after year end. Okay. So similar questions you have. Undisclosed income.
Class 8.
Yeah, clause 8. Auditor must report
If not recorded.
yes. B. Option B is the right answer. Okay. Next, clause 6, Purpose of clause 8 reporting is to ensure.
B.
Yeah, true and fair disclosure of all income. Okay. This is just for quick knowledge which we are doing. Okay. So anyways, we have covered case-based scenarios. Okay. So we will go back to presentation. Just give me a moment. So you can see my presentation, right? Yeah.
Yes, sir. Visible, sir.
Yes. So this is what we have covered, and we have also covered few questions. Okay, few more questions also. So section 143.12 we have discussed. So I'll quickly revise. If fraud reporting, okay, if fraud involved is more than 1 crore, the auditor should report. Sorry, if fraud report is less than 1 crore, auditor should report to board within 2 days. Okay, and board has to report in their board's report. Specified details in board reports. What are the details they need to mention? They need to mention nature of fraud with description, approximate amount involved, parties involved, remedial action taken. So I repeat, if fraud amount is, so we are discussing section 143.12. So fraud amount is less than 1 crore. Auditor, the moment he noticed, the moment it came to his record, or he identifies, he should inform to board or audit committee. Then what they should do in 2 days? Okay, board has to do investigation, and board also has to report in their board's report that certain things have been reported and we have done investigation. It has been came true or it has been came false. What is the amount involved? Who are the persons? If it is true, who are the persons involved? What is the amount involved? What is the fraud description? How the fraud has happened, in which area? Is it purchases? Is it sales? Is it some expenditure? Is it some traveling expenditure, etc.? Similarly, if fraud is more than 1 crore, auditor has an obligation to report to central government, but first he should report to audit committee / board within 2 days. Wait for 45 days from that date to get their response. If they don't get the response, that has to be, the information has to be passed on to central government. If they give the response, our complaint, means auditor complaint along with the response, has to be submitted to central government within 15 days. That is what it talks about. We already had quick discussion. We also had a revision. So there are a few more questions, which is audit versus certificate. What is the difference between audit versus certificate? We will definitely cover this tomorrow. And we also have notes to accounts versus audits report. That also we'll cover tomorrow. Section 145 of the Companies Act, which gives duty to sign the audit report. Along with these topics, the other topics will also be covered in the next class, okay, which is 143.9, complying with the AS. SA 700, there were 2 topics which I want to emphasize, so I will take it up, going concern as well as location of audit report, where the audit report has to be placed, okay, and SA 701, which talks about key audit matters, SA 705, which talks about modified opinion, SA 706, which talks about emphasis of matter paragraph and other matter paragraph, SA 710, comparative information, if the previous year is audited by some other auditor, SA 720, which talks about auditor responsibility with respect to other information. So all those topics will also be covered in next class. So any doubts you can ask? Any doubts you have?
Students, if you have any doubt, you can ask.
No, sir. Thank you, sir.
Yeah, thank you.
Yes, sir. Thank you. Thank you, ma'am. Thank you, sir.
Thank you.
Thank you, ma'am.
Thank you very
Good night.
much, Venugopal sir, and all dear students and IT support team. And do remember, your feedback is very, very important. So please share your feedback, how we can improvise, what addition we can make in the class, how we can make it much more better and interactive. So your feedback is very, very important. So please share, and whatever topics we have covered, like we have covered the Caro. So please revise the Caro clauses and do written practice as well, right? Apart from the study material, you can also use the other resources like integrated case scenario booklet, and answers are also supported by the reason in the booklet, right? And Venugopal sir has done very hard work. He chalked out which are the questions covering Caro, what kind of questions are those, on which clauses maximum questions are there. So he did lot of hard work. And in the next class, Venugopal sir has already told you that what he is going to cover. So please prepare in advance and be attentive in the class. And I hope you are noting down all the important pointers. Notes of the class will be uploaded for you, right? So on Wednesday, again, we'll be meeting at 6 p.m. And I hope you all are aware that we have also started our live virtual revisionary classes for January 26 examination. It's on Monday and Saturday morning 7 to 10 a.m. Right? So with this, thank you, Vedugopal sir. Thank you all the students. Thank you to IT support team. Thank you to back team. Thanks a lot. Thank you.
Thank you everyone. Thank you tech support team. Thank you.
Thank you, ma'am. Thank you, sir, for that summary of that MCQ.
Please share your
Really,
feedback.
really amazing that is.
Sure.
Yeah. Ashokji, session over.